Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
Today's economic calendar will be 100% focused on this afternoon at 3:30's NFP employment change report that will be released in the USA. Currently forecasted, we are expecting to see weaker numbers than the previous month. However, we do know that NFP has held a lot of surprises over the past few months.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the euro dipped against the dollar after the European Central Bank raised interest rates by a widely expected 50 basis points, while the Bank of England adopted a more dovish tone on inflation. The ECB penciled in at least one more hike of the same magnitude next month and said it will then elevate the subsequent path of its monetary policy. The Bank of England also raised rates by 50 basis points and dropped its pledge to keep increasing them forcefully, if needed, and said inflation had probably peaked. The European Central Bank was more or less in line with expectations, and the Bank of England sounded a bit more dovish, which is helping to slow the dollar's decline. Now let's move over and see what's making headlines on Wall Street. Indices finished mixed as traders grew cautious after a slew of mixed earnings reports. The Dow Jones was down 0.2%, the S&P 500 fell 0.6%, and Nasdaq 100 futures was down 1.2% after yesterday's session. In extended deals, Apple shed 2.8% after the company reported Q1 earnings per share of $1.88 versus the $1.94 expected, while revenue came in at $117.12 billion versus $121.88 billion expected. Amazon fell 4.2% after reporting earnings per share of only 3 cents versus the 17 cents that was expected, on revenues of $149.2 billion versus $145.64 billion expected. And finally, Alphabet shed 3.7% after reporting earnings per share of $1.05 versus the $1.18 that was expected, on revenue of $76.05 billion versus the $76.07 billion that was expected. Additionally, Chinese stocks sank this morning amid broad-based losses as mixed economic data raised some concerns over the timing of the economic recovery this year, while broader Asian markets rose cautiously in anticipation of key US non-farm payroll data. Now let's head over to commodities. Oil prices fell slightly this morning and is headed for steep weekly losses as fears of a US recession coupled with uncertainty over the economic recovery in China weighed on the near-term outlook for crude demand. While prices took some relief from weakness in the dollar earlier this week, the trend was swiftly reversed on Thursday as the greenback rebounded in anticipation of non-farm payroll data for January. Markets feared that strength in the US job market would keep inflation elevated for longer than expected, inviting more interest rate hikes by the Federal Reserve. The central bank noted that while inflation has retreated in recent months, it still needed to raise interest rates to pull down price pressure further. Higher interest rates are set to weigh heavily on the US economy this year, which has brewed concerns that crude demand could weaken amid a potential recession. Gold prices inched higher this morning after pulling back sharply from 9-month highs in the prior session as the dollar rebounded in anticipation of that key non-farm payroll data, while other economic readings showed some strength in the labor market. All this while the Fed recently noted that inflation was easing, markets feared that resilience in the job market could keep price pressure stubbornly high for longer. Jobless claims unexpectedly fell in the prior week, while other data showed US automobile sales grew in January. The dollar rebounded from a 9-month low after these readings. Given that recently high inflation could keep the Fed raising interest rates this year, a negative scenario for gold and the metal markets. And finally, let's finish things off with cryptocurrencies. CryptoZoo and Logan Paul have been named as defendants in a newly filed class action lawsuit, which alleges that they stole millions of dollars from purchasers' cryptocurrencies via a fraudulent venture. In a court filing on February 2, 2023 in the District Court of the Western District of Texas, plaintiff Don Holland alleges that Paul and executives of CryptoZoo executed a rug pull by promising purchasers of non-fungible tokens exclusive access to crypto assets among other benefits, but ultimately abandoned the project and kept the funds for themselves.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the force be with you. Cheers.